Okay, sure, please, go ahead.
All right, welcome back, everyone. I hope you enjoyed your break. Now, before we move on, we'd like to express our gratitude towards our silver sponsors, Felipe Salem, who is the Director and Head of Sales and Trading at Chainmine, and Bobby Lee, who is the founder and CEO of Ballet Crypto. We're very grateful to have them sponsor our event. Now, moving on, let's begin the first panel discussion of the day. It is on the topic, how is innovation and technology changing payments? Banks and financial service institutions have held a monopoly for decades. With digital transformation in the picture, new payment service providers and a rapidly changing technology landscape have changed how banks approach transactions. Panelists will now explore the role of tech in changing payments. Please join me in welcoming the session moderator, Hari Titan, founder of Big Data Risk.
Thank you. So I'd like to welcome you guys to a panel discussion on how innovation and technology is changing payments. This discussion will cover specific topics that are relevant for payments in both the what's called the traditional fiat currency space as well as the cryptocurrency spaces. We will follow this conversation with different views on projecting forecasts for the future. And finally, we'll have about 10 minutes for Q&A. So let's begin with each of the panelists introducing themselves. And let's start from left to right.
Okay. Good afternoon, everyone, or good morning, everyone. My name is Kimberly Rosales. I am the CEO of Chainmine out of Quebec, Canada. It's our first time in Money 2.0, so thank you very much for the opportunity to be here. I've been in the industry for approximately 16 years, started in retail banking with TD Canada Trust, which you guys know as TD Bank here in the US, and then moved over to cryptocurrency approximately 8 years ago and created the OTC 2 years ago. So we created this holistic approach for a wealth experience and introduction into the crypto space for the high net worth individuals.
My name is John Wingate. I've been in crypto since Bitcoin first started back in early 2010 and just continued to learn and grow along the way. I'm a software developer by college and a serial entrepreneur. And I'm the CEO and founder of Bank Social, Financial, Block Advocates, and an advisor to a few other companies. So very heavy in the crypto space and helping educate, push forward, and transform traditional finance into this new age of finance.
Hey guys, this is Himanshu. So I'm from Houston and joining this great conference, this great panel discussion. So I'm in industry for last 18 years in serving for various banks and financial institutes. Currently I'm working as a CIO for Fair Fintech, which is a neobank. And what we are doing in a neobank is we are aggregator of various financial services from different fintech. So last 1 year is a roller coaster ride because so much happening in finance and fintech especially. Again, blockchain has drastically changed a lot of things which we are doing for last couple of decades. So this is an exciting time. Thanks for having me.
Good morning, I'm Joel Cleland. I'm the CEO of Centric Protocol. We're a two-token cryptocurrency company with one traded token, one token that's in network and provides hourly yields to the users. This past July, we got set up with our very first cryptocurrency payment gateway, which we'll be talking about later. And to date, we're up to 3 cryptocurrency payment gateways, and we have 29 companies globally that are accepting our crypto for their goods and services. I'm really excited to hear from the panelists together as we talk about the future of payments.
Good morning, everybody. My name is Casey Barca, hailing from Boise, Idaho. I'm very happy to be here at the Money 2.0 conference. By By degree, I'm a chemist, biochemistry, molecular biology. Spent the time on the bench lab, white coat, and then transferred over to specialty tax consulting, which is the next logical leap in that career path. So I'm more on the end of the R&D space as far as being able to help companies get money back for doing the innovations in the technology space. So, go ahead, Ari.
Perfect. So I kind of skipped over myself earlier. I'm coming more from the fiat payment space. I've worked in fraud detection on credit cards as well as online, various different kinds of fraud detection. So that's my perspective, is trying to increase the comfort level for crypto to the point where we can have more transactions on crypto. So that's hopefully where we'll end up going. So let's start with some of the specific topics that are preventing transactions happening on crypto, and see if we can talk about ways to increase those transactions. So one is basically fraud. Crypto is obviously a good way to prevent fraud during the transaction, but of course you can still lose your coins. They can be stolen, etc. So there's some risks there. In the fiat space, Apple Pay and Google Pay, for example, have chosen to use tokenization as a way to reduce the likelihood that your credit card number will be stolen. So the idea there is the system contacts your bank. They have access to your credit card information. The bank looks at the device information as well as the credit card information and gives you a temporary token. And then that temporary token is shared with the merchant. So the merchant never really gets your credit card information. So that nobody can hack into a merchant site and steal your credit card information. So that's been the focus of traditional fiat fraud prevention, and so that's really where I think they're focused on preserving this credit card number and just trying to make it a safer transaction. So the other topic is KYC and AML, and I think maybe John can speak to that as
Yeah, so I think the idea here is how do you get more adoption, wider adoption, faster adoption that is built on the payment rails of crypto. And one thing that we're seeing is that from regulators, from governments, from all these different entities that kind of police these things, I guess to your point, we're starting to see this push towards KYC and AML. So when you look at these systems and when you're building out these systems, I talked to a few guys over here doing this gamified savings bank program for kids called Eden. It's really cool. And the things they said to me initially are KYC, AML, and there are a number of SDKs and software development kits that you can tie into very quickly if you're thinking about building an app, or if you already have an app and you're trying to integrate with crypto. This is going to be one of the main focuses that you've got to be thinking about, because if you're behind the ball and you don't start implementing these forward-looking solutions and regulators come in, they're going to be much more likely to be harder on you or take longer. I don't know that the outcomes are any different, but certainly something that you need to be looking at. I think that to also talk about your point of tokenization. I mean, this is exactly what you're talking about when you're talking about crypto, is tokenization. So with the exception of losing your keys or giving up your keys, there's really no hackable. I mean, just because Apple is storing your personal credit card information doesn't mean it doesn't get hacked. I mean, that happens all the time. Look at Experian, just weeks ago. So, the same types of hacks don't exist in crypto. And for that reason, it's inherently more secure than the traditional payment rails, but we have to do it right, and we have to look forward. And this is going to be a topic that's going to start to come up a lot. So if you are thinking about implementing some type of solution, you need to be looking at KYC AML. There certainly is the decentralized world of things that still has its place and can continue to function, with DAOs and with other types of legal structures and entities. But, KYC AML needs to be one of your main focuses when it comes to, connecting with the traditional payment rails.
Yes, absolutely. And Binance, for example, one of the crypto exchanges, has been come out and said they're going to increase their KYC and AML and basically try to prevent what we were talking about earlier, which is potentially Russians trying to transact oil on crypto. So this is sort of a big push to try to increase KYC.
But the balance here is KYC, so you also have to look at the other portion of this, which is self-sovereign identity and decentralized identity. So this is the next wave of identification, okay? Just like you have your keys to your crypto, you're going to have your keys to your self-sovereign identity. And it's going to have all the information. This is how I explain it to people. When you go into the liquor store right now, you pull out your ID, they don't need to see your address and, all this other stuff about you. They just need to know, is he over 21? So these are the types of solutions that you need to be thinking about as you move into this area, because people in the crypto space especially have this idea of sovereignty, self-sovereignty. It's not that I want to hide. It's not that I'm going to do illegal shit with what I'm doing. It's just that I want my sovereignty of as much of my data as possible. So self-sovereign identity, SSI, and then you'll be in control of your own data. If it gets hacked, it's because you gave up your keys and you didn't, don't give your keys away to your house. Put those in your pocket. Don't give them to anybody. Same concept.
Right. Okay, so the next topic is what kind of utility or functionality would help increase the number of crypto transactions? So in that category, payment gateways and processing. Maybe Kimberly, you could talk about that?
So as the economic world has been changing in the last couple of years, we see businesses, especially now with the inflation, businesses trying to look for, they need to do the hard thinking and look at the alternative solutions, more low-cost payment solutions, where they can, whatever fees, they can throw it back to their clients or vice versa. Definitely, it's something to look at. We see a lot of jurisdictions now adopting cryptocurrency as their main payment and their main currency. And, definitely there needs to be a lot of technological improvements to make sure that it becomes more of that crypto standard, and I see that coming in the coming months. We're in the future now with payment processors and crypto exchanges coming together and merging their ideas and bridging that gap between traditional finance and crypto finance.
Good. Joel, do you want to jump in?
Sure, I can piggyback on that. I noticed over the last few years that the traditional credit card industry has also kind of connected itself to crypto, where crypto users, they want to have their reserves, if you will, maybe a debit card that's attached to their crypto holdings. And that obviously speeds things up now. And the crypto payment gateways allows cryptocurrencies to integrate online and also with traditional brick and mortar, so that businesses can attract those crypto customers, if you will, people who prefer to transact in crypto. And then the businesses actually have options using these crypto payment gateways. They can hold the crypto, or they can go right back into whatever their local currency is, which a lot of them choose to do. But I think there's two things that we can't forget to talk about in a conversation like this. One is the group of people who are being affected by this and the future, because this is the future of payments. And and then just the nature of speed. We got to be honest about where we're at in the space. And I think blockchain's got a long way to go. But one thing that I think is significant is that people ages 18 to 40, the millennial Gen Z generation, and then their children are very comfortable using crypto. And that doesn't mean that it's going to be the only thing that people use, but whatever people decide money is, it is.
Yep. Good point. John, do you want to add?
Yeah, so one problem with the traditional payment method is the transaction fee. You can't do microtransactions. I worked at a 3PL retail white label Amazon company for 8 years, and one of the things we always tried to solve for was microtransactions with something that people actually felt was money instead of just loyalty points or stuff like this. It's very hard. But 30 cents plus 3% doesn't work. You can't give somebody their money back. So when you think of crypto, when you think of these systems that allow you to do this, let go of the traditional paradigm. You can build a coin, you can build a token that's transmutable to Ethereum or Bitcoin or whatever other chain, and you can allow that liquidity to be the way in and out of your ecosystem. So I think when you think about crypto in a utility standpoint, let go of that traditional rail and thinking, and think about how you can use really that low transaction, secure, immutable layer of the transaction system to facilitate value in whatever ecosystem you're putting together.
Right.
So I think that's
Right.
a main focus for utility going forward.
Yeah. Casey, do you want to talk about loyalty points and then maybe work into tax implications?
Well, kind of going back to John's point, like what does a loyalty point mean, right? What is the real value there? I mean, it's an incentive, right, to get people to use whatever you're trying to peddle, right? Whether it's your Starbucks card or I don't know, whatever. But it's the adoption. It's getting people to realize that in their current system, everybody's paying fees as it is, right? Everybody has bank fees. There's late fees. There's all these other penalties and everything else. I mean, and there's the same types of fees associated with crypto, right? There's the gas, right, to do the transactions. And to your point about small transactions versus big, and the speed factor. But what kind of going back to me on the back side, there's the incentive for companies to get to the next thing, right? What is the next big innovation? And there's obviously implications at the business level, right? It costs money to innovate, and there's companies around like myself that can help you return some of that investment back to help grow your companies that much further. So as adoption gets more and more prevalent, there's going to be more and more incentives that the governments are going to be handing out to incentivize companies to keep doing the innovation.
Okay. So on the tax implications with crypto, because crypto is regulated as an asset, and so you have capital
At least
gains
here.
potentially,
At least in the US.
right, here in the United States. So now a transaction could have tax implications. It could be a taxable event, right? Which is everyone, not just sales tax, but capital gains. So is there a solution to this in the United States? Can we find a solution? Casey, do you have any thoughts on
Don't sell your crypto, maybe?
don't sell your crypto? Or
Don't
just-
sell, right?
Don't
Continue to
sell.
hold.
Total.
The value is only going to continue to increase. But yeah, I mean, this is one of the first years where I think Coinbase and some of the other bigger platforms required you to actually list on your tax return whether or not you held, sold, whatever, and
Right.
those capital gains now are taxable, right? So there's definitely implications there going forward. I mean, what is that going to look like 3 to 5 years from now?
Can I ask you a question?
Yeah.
So, the way I do it is I keep crypto, and then whenever I take my crypto and pay myself in crypto, myself as a person, I cash it out immediately into cash. What are the implications of something like that? It's just regular income.
It's
There's
just
no
regular
capital
income.
gains or,
It's
or
Right,
income.
so you have both income,
so
but
that's
if
what
you
I'm
hold
saying.
it, then you
When
have
I
capital
say
gains.
keep your crypto, don't sell your crypto. Keep it, keep everything over there, in my opinion, and then sell it for cash whenever. I don't know if you saw some guys ripping up dollars. I don't advise ripping up dollars. It's a waste of money, but
Plus, it's illegal.
and it's
Yeah.
illegal. Yeah, exactly. But it's also, like give it to somebody. Don't tear it up and throw it away. But yeah. So sell it. You're fine, but you tax them just like income. Cool.
Yeah. So one trick that people do with stock assets, for example, is they borrow against it. So instead of selling the stock, they get money from a bank with that as collateral. So if you can collateralize your crypto and borrow against it, you may be able to avoid a taxable event.
Is that like debt? Is that like taking on debt? Yes.
Yeah, that's exactly what it would be. So you lower, right? So yeah.
Okay.
go.
Okay.
Good one right there.
All right, I'm going to transition to the next thing that's I feel is sort of a blocker, which is the transaction speed for completing these transactions. So China, I believe, is taking the lead in many ways. So there's transactions per second. China's CBDC, which is central bank digital currency called the ECNY, was used in the Beijing Winter Olympic Games, and it ran at up to 10,000 transactions per second. However, the difference between a central bank digital currency and Bitcoin, or traditional public blockchain, is that it's a private blockchain. So all the people controlling the central bank digital currency are governmental agencies. And so because it's centralized, they can have a higher transactions per second, because they're not trying to make a replicate copy on every node. So that's one of the reasons why they were able to get such a high transactions per second. Visa, on average, runs at 1,500 transactions per second. That's their average, so their peak might be much higher than that. The U.S. is, the Boston Federal Reserve is experimenting with, they've joined with MIT, and they're experimenting with a digital currency under something called Project Hamilton, and they've achieved over 170,000 transactions per second. So the United States does have the technology, and we figured out how to do this at a very high transaction per second rate. But it's still, again, it's a centralized system. So it's not the same thing as Bitcoin, which is a public blockchain. Alipay's system ran at 544,000 transactions per second during the 2019's Singles Day shopping event, which is a big deal in China. And so that's why I was saying earlier that it appears China is ahead on this transactions per second. But I think we can get there if we actually have the right regulation to back us up. I think at this point I'm going to, because in the interest of time, I'm going to switch over to, here we're going to have some rapid fire forecasts into the future. We're going to have different viewpoints, hopefully backed up with some reasons. So the first question is, will cryptocurrency transactions take over fiat currency transactions in 10 years' time? Okay, I'm going to start with Casey.
I've kind of gone back and forth on this. I don't think it will. And the reason I say that is because of, the billions of people, right? There's a very, very small portion of the population that even knows what crypto is, right? So you've got elderly, you've got people in rural areas, right? You have to have internet infrastructure to use it, right? So there's a lot of skepticism. There's a lot of just infrastructure that needs to be built out before you can even attempt to have that level of adoption, in my opinion.
Okay. John?
Yes, I think at the end of the day, these are databases. They're data store layers. They have some unique features about them: immutability, decentralized capability. But all we're really talking about is our financial institutions going to swap out their layers. When you look at some of these banks, they're certainly using some very antiquated. We're talking about COBOL in some instances. A lot of retailers, same System 38, System 400s. It's crazy how old the technology is. These institutions are ready for a change, and this is going to bring them the ability, again, I'm not talking about our banks going to start using crypto, Bitcoin. No, cryptocurrency, decentralized ledger technology, immutable technology is more than just crypto or cryptocurrency. So it's going to happen, and it's going to happen very fast, and I think we all need to be ready for it and be a part of it, understand how to use it, get familiar with the systems.
Okay. Kimberly?
I don't see it as taking over. I still see that there's a lot of work to do to be crypto standard. I think in 10 years, we're going to see a big division of markets really working into cryptocurrency and another part working with our standard banking. With the very, very rapid adoption, I mean, we see a lot of jurisdictions like Japan, El Salvador, and I think Honduras now coming on board, making it legal tender, facilitating with the Lightning Network, the speed of transactions. Again, I go back to the evolution of technology for fraud. It's going to be very, very important to move this forward. But I think that in 10 years, we're going to see a lot more of cryptocurrency, and encouraging the businesses with good intent in the crypto space, educating the communities, especially the rural ones, South America, expanding the payment industry there with crypto is going to be crucial. And
Okay.
China's not printing cash anymore, by the way. They've already done this.
Yeah.
So to think that this is, something not coming, China is doing this. So prep yourselves, guys. It's coming. Get ready for this.
Yeah. Great answers. Next question. Will large financial companies acquire smaller companies to remain dominant? And we'll have Joel start this one out.
Short answer is yes. One of the things I thought was interesting is companies like Microsoft getting into bed with companies like Consensus, which makes perfect sense. And then you have companies like Berkshire Hathaway, and Warren Buffett has said what he said in the past about cryptocurrency, but then they're divesting themselves of Visa and MasterCard while, investing in a Brazilian Bitcoin bank. That's significant. The one thing that I think is most interesting, more than any of this, is part of what Casey was saying, is that we're still in the early days of adoption. Only about 4% of the planet is in crypto to one degree or another. But large crypto firms are starting to do investments in smaller companies as well. BCB is a company out of Europe, which is a crypto trading and payment company, and they're actually looking at buying a 100-year-old German bank.
Wow.
Which is interesting because banks have charters and they have lending, which we were talking about debt very briefly. And these large financial firms, even if they're crypto firms, they get it. They know that, hey, we need this in our basket of assets, shall we say. Coinbase did the same thing with Fairx, which is a traditional derivatives firm here in the U.S. And a couple of others did the same thing.
Perfect.
Yep.
Perfect. Casey, do you want to add something to that? No?
Do you find, so you were talking about basically how, man, hold on, I just forgot it, never mind.
Let me add on that.
Yeah.
So I have a good understanding on that because I was working for a very long time with large banks, and most of the time they grow their business by inorganic acquisition, right? So you see if you see the history over the last 150 years, most of the US banks have acquired hundreds of banks, not just few banks, hundreds of banks. And there are some large banks which acquire their name through the acquisition, right?
Yep.
All top 5 banks are built by acquisition from east to west, right? They have acquired from different state because the licensing cost of doing the business is also different from state to state, and they have to have the staff that they can do the trading and basically mortgage service, whatever services they do, they have to train that staff. So better to train is to acquire inorganically, right? So this is not going to stop, right? And to build that kind of infrastructure, right, in couple of years is not possible. So best is to acquire somebody who has already done that. And to my point for the transaction, number of transaction, that is going to definitely be significantly more in crypto. And it may bypass, because the other thing is that we have to look is all the large countries are also working to convert their fiat currency into crypto. So what probably may happen is when there will be a opportunity that these transactions are start happening within even knowing, without even have a significant impact to customers, they will start using crypto without knowing it.
Yeah.
Right? Same thing is Jack Dorsey is doing with Block, right? He's launching the wallet because people are shy using a wallet like on mobile phone, so they want to have a hardware. And I think these things will catch up over a period of time where people will start using things which they even don't know that they are using a crypto.
So let me tell you what we just started. It's very new. So we're putting wearables, we're putting Internet of Things devices, wearables to change the loyalty rewards points game by really getting engagement out of people. So sewing into their tags, something that will track them through their phone and then allowing them to earn as they wear it outside or put on outfits, playing in the AR metaverse. You're right. That's how you're going to start building crypto into applications. People aren't going to take Ethereum and move. They might do that a little bit, but most of it is going to be happening that they don't know about.
It's in all the video games, it's already there, right? In many of the video games, they are providing crypto, like NFTs is there, right? You can buy the weapons and then you can...
Let me ask you a question about the Microsoft and consensus, because that's a very interesting thing that happened right there. You know, people were like, well, they came and bought early before and nobody really knew.
Consensus was in startup.
Yeah, and nobody knew and they didn't tell the shareholders and board members. What do you think about, and are you guys seeing any move to, the people that I know that are buying companies or buying sharing companies, they're buying like the token supply or there's a certain, share. Are you seeing more of that happening and people moving to that? Because that's also an interesting concept along with your, financial rails of the system, the ecosystem. You can also have a portion of that that's funded in the right ways with tokens and letting people buy so it's transparent on chain.
Well, at the LOI level or the simple agreement level, companies are coming together. At least this is what we're seeing. Companies are coming together and maybe they've got an agreement of you have to use our token for the next 99 years. Or something like that. You can't release your own, you got to use ours. That's the relationship we have. And then for that, we're leveraging whatever you have. Maybe it's your metaverse marketing, maybe it's something in the real world.
So like decentralized business building, I think
Yes.
is also an interesting concept here for the future. So people are trading tokens, okay, that might have future value. It's a very interesting concept. Are you seeing any of this kind of happening?
Yeah, recently I was talking, I'm also an investor in small companies, startups. So one person approached me and she has a very interesting idea. What she was trying to do is building a NFT exchange for VCs to invest in non-traditional medicine, right? So people are coming with very innovative ideas. And I think that's the thing, like 10 years is a very long time, right? In technology especially, right? It's like 10 years back, iPhone is not there, right?
Bitcoin was just getting off the ground 10 years ago.
Right. So a lot of things are not there, maybe Nokia was the biggest player in the market 10 years back. Right?
Yeah.
So 10 years is huge amount of time and it's not the change is happening continuously, the speed of change is also accelerating.
Right.
That's the biggest thing. Until there is a drastic change in the economy, the change acceleration will be more and more.
Yeah.
Absolutely. Right? Because there is always more funding.
Right. Okay. Good point. So the next question is, it doesn't have a 10-year horizon. It's more immediate. What do you think of central bank digital currencies? Are they going to take over private,
It's just a
Public-
database.
yeah.
These are just
Yeah.
databases.
Yeah,
So
these are just-
we already have the digital dollar, okay? China already is phasing out their paper money. So really all we're asking is, can the government, you said the one federal branch is already looking at it,
Yeah.
can they just switch out the Oracle database for a distributed ledger database and make it immutable and more easily trackable? Yes, they can do it very easily.
Joel?
We brought up China earlier, and I thought that was interesting, the digital yuan. They were the first country to really get that government digital currency off the ground. I mean, we have it in the U.S. It's just ones and zeros, and the Fed hits the print button whenever they need to up the money supply.
It's not transparent.
That's true. That's true. But the CBDCs in China, they're going to be widespread by the end of the year.
Yeah.
And I think what we're seeing is that countries like China, Nigeria has one, the Bahamas, they have the sand dollar, which is basically like the Bahamian dollar, which is very close to the USD.
Yeah.
Miami's thinking about doing it.
Yeah,
Miami's
yeah.
like on
Well,
the
you can
verge
pay
of
your
doing it.
taxes and your fees in Bitcoin in Miami, so they're already there with the payment side.
Yeah.
Yeah, but they're even talking about making their own Miami coin that you can use within the city for city things outside of taxes.
Yeah, sounds good to me. Let's keep things private.
For
Himanshu?
adoption, though,
Oh, yeah,
just
sure. Go ahead,
10
go
seconds.
ahead.
For adoption, though, I mean, China has the distinct advantage that they can literally tell 1 billion people what to do.
What to
also.
do, that's true.
So can our government. They print money for us all the time. They're telling us exactly what to do.
I think one thing that happened, if there were some good things that came out of the pandemic, was just that everything is starting to trend more and more contactless.
Yeah.
And it's like, okay, well, this is one more way that we don't have to touch each other is by
Yeah.
using digital money.
Yeah. Kimberly, do you have any thoughts on CBDB, DCs? No? No? Himanshu?
So I want to add one part here is like, although like, whenever there is a new technology, they are initially, like to take an example, Bitcoin is there.
Right.
But not necessarily the Bitcoin is the winner,
Right.
right? After 10 years,
Yeah.
right? There may be something else, which may be a combination of a government owned
Right.
or something which is private. We never sure of the future, but the thing is like it's moving in that direction. And the other part that is great here is like people are talking, right?
Right.
And nobody's stopping that. That's the good part, because once you see like if any other country, like in this case, like if China is getting ahead, like there's nobody stopping in US to not move in this direction. Only thing is like that's the matter of time. Maybe in 5 years,
Yeah.
right? There are more basically controls and compliance on this, and the very critical part in the banking side is a lot of compliance, and banking people are very they never try to take any risk. Like in banks, they are like there are third party risk avoidance, and then you go to the fourth party risk avoidance. So like say to give an example, like if I try to use cloud, right? Then I have to make sure that the cloud provider is following all the compliance.
Right.
Then if they are using a vendor, then I have to go to that vendor and I have to make sure that they are also following all the compliance.
Right.
Because of risk of losing in a banking environment is huge, right?
Yeah.
It will deteriorate the bank in a day, right? If there's
Yeah.
a major leak. There are leaks happening, but then they are trying to control the things, right?
Yeah.
And sometimes they are doing various different controls, like maybe they are providing that information to the end user, but then at the same time they are trying to control with like they are also talking with the person who are trying to hack the system, right?
Right, right.
They are negotiations in that direction. But the key part is the banks always try to avoid risk. And if there are systems or there are third parties which have created a solid system, which they can acquire inorganically, right?
Yep.
I think that will be the turning point. It will be an immediate event that will change things very
Okay.
fast.
Okay. Yeah, I also have sort of a view of CBDCs, like basically that's a sovereign currency, and the government, if they feel that, for example, Bitcoin can't be controlled and they can't actually know your customer for every single node there, and that potentially Russians could trade oil secretly through that network, that may become a push for central bank digital currencies where they have more control, and it's not a public cryptocurrency. It's a privately run cryptocurrency, basically a sovereign-run cryptocurrency. So they can know exactly who is making every transaction, and they can apply the sanctions list and the anti-money laundering and KYC. They can go all in.
It allows them to automate it because of the way you can track and bubble up transactions on
Exactly.
chain. The current systems are so siloed and distributed between banks, and they're relying on the banks to do SARs up to tell
Yeah.
Regulators, hey, there's something happening over here.
There may be something
There
happening.
may be something
Yeah,
happening.
they don't know for
Exactly. They
sure.
don't even know. They're just like throwing everything up there,
Yeah,
and then
yeah.
FinCEN's like, oh my God, this is crazy.
Yeah,
So I mean, you have to look at that, but it provides kind of more security, right?
Yeah, more control, definitely. I'd like to open it up to Q&A with the audience. Are there any questions? Can we get a mic through the audience?
Sure. Go ahead. Hang on.
Yeah, need a mic over there.
So maybe address this, but what do you see as the risk of central bank digital currency in terms of the government saying this is the way to use it, and we're going to make these other methods such as Bitcoin illegal somehow, or there's going to be some regulation? I mean, in China, they can turn off your wallet, right? Your money can just disappear because they're controlling it. What is the risk of supporting that central bank digital currency, and is that really the play that's going on here?
So really, the central bank digital currency, I don't see it as being, very terrible, because I'm all for KYC, AML, and self-sovereignty of my identity. It's going to take us a while for those two to coalesce between private and public sector. But I think that from the CBDC standpoint, you're not going to really have much of a shift. I mean, okay, pure dystopian, you're only allowed, because you said something on Twitter, you're only allowed to drive to work and back in your, self-driving car, and you get 2 tubes of Cricut paste per week. That's like, the worst case. But I don't see governments being able to do that, and I think that's why getting these decentralized currencies now and acquiring them when you still have the ability to is something that I would advise you to do as they continue to grow. But a more trackable dollar is really what we're looking at.
Yeah,
you wanna add?
I would say that the concerns people have are somewhat legitimate. It's, large-scale surveillance, for instance. And again, I don't want to get conspiratorial, but the long and short of it is that, if they can turn off the wallet with a Chinese CBDC, they could turn off your wallet with a U.S. CBDC,
Yep,
in a sense.
exactly.
It is a real concern. Plus, I mean, it's the whole tracking of data, is just seeing what everybody does, when they do it, and all of that, I think is a concern for some people, some users. That's what I've been hearing.
Yeah, and I think you have the risk of supply chains, like if the whole ledger is available to the government, and perhaps that people can buy the data, then people can buy your entire supply chain, and so there's a lot of risks there with that, but
And understand that when we say CBDCs, we're not talking about CBD oil. Sure.
Oh, well,
Because there's a lot of confusion around that.
that's
We have a
right.
question.
That's the room over there.
we have a
Are
question
there
of-
other questions?
Yeah, over here.
Oh, okay.
Hi, Doug Yangs from Chicago. I've had some experience with crypto. I can say that I probably made more money in crypto than any other thing. That may be a plug. But I would say that what I'm curious about is my take has been whatever I place in it, it's whatever I don't mind losing. And so if I don't mind losing that, then boom, I'm okay. If I lose it, I'm all right with that as well. So what I wanted to know is, what are we telling our clients so that they get familiar or get comfortable with the risk, if there's risk, and what are we doing to educate them so that they're like, hey, I want to get into crypto?
For sure.
Because you hear these buzzes in the street, and they may not all be correct. So if you
It's
could
true.
speak to that.
Yeah, go ahead.
One of the
Joel?
things I would say is changing the narrative is really important. Instead of, this is the amount I'm investing, I'm willing to lose. Invest as much, if you're going to invest, that doesn't have you checking the charts every day.
Yeah.
Because crypto isn't for the faint of heart. But in the United States and in Canada, there's still a lot of compliance. Himanshu used the compliance word for banking, but there's also compliance on, those who are asset advisors and certified financial planners and things like that, where you can't really talk about it, even if your clients bring it up. And so a lot of that's changing. I'm hoping that we get some good ideas from out of the Biden administration's executive order. I hope that the Congress can develop some guardrails, some understanding for people that are in financial services so that you can have those real conversations with people. It's not about what you're going to potentially lose or gain. It's like, do you even want to be in this new asset class? And what's going to keep you from looking at the charts every day?
Yeah.
On the OTC side, we always, when we have the conversation, because we have that holistic approach, so we always have that one-on-one conversation with the clients. We suggest a certain percentage, and ultimately our message is always it's not high risk, it's just high volatility. So go for it, have fun, and of course encourage the utility of the cryptocurrency in the business world.
Yeah.
But that's what I'm hearing from a lot of people that are a little bit hesitant about it, is the volatility of this at the moment.
Yeah.
So how do you sort of handle that with clients?
Well, I think just looking at historical data, right? Looking at its performance. I mean, when we started looking at Bitcoin 10 years ago, it was like, what is that? No, I don't think so. And as it's starting to grow, now people are starting to pay attention and seeing that there's really starting to be a demand. And as technology evolves and all these new markets are coming abroad, then for sure it's going to keep growing.
And they're not investing in a company. They're not investing in some, user managed thing over here. They're really investing in this decentralized distributed network of value that has no central point of failure. 10% of it could go down tomorrow in China. I mean, look at what happened. China shut everything down, said, 35% of the hash rate's down tomorrow. Okay, no problem, kept going. No problem, kept going.
Yeah.
So, that's what I think you've got to get them understanding. And then I think people are scared about the whole what is it mine? Is it yours? Who's holding it? I don't want to lose it. So I think those two things are the things we see the most when we have people come to us asking about it. But I think maybe the first is more important.
I want to add on that.
Yeah, sure, go ahead.
So
Himanshu.
basically, we have to look it on the complementary side, right? Because there are always volatility on both, like in stocks if you go, and in the dollar itself, like there is an inflation, right? So there are various factors impacting your stock, your currency, right? On the crypto side, like these factors are not there. So they are basically complementary each other, and it depend if you are, what kind of exposure you are putting there, right? So it basically how you plan your actions.
Yeah, and I think if you read Janet Yellen's actual press release that she did recently, she kind of was stoking the flame under this volatility by saying, well, maybe stable coins or central bank digital currencies is the way to go to reduce anxiety over the volatility. But I think earlier we spoke about maybe buying and holding your crypto and finding other ways that don't involve selling it. And maybe borrowing against it might be one way. So
Definitely consult with your tax lawyer.
yeah, consult
What we
your
may
tax-
see as a CDBC to just provide a little bit more clarity is stable coins, banks creating their own stable coins and then rolling up transactions to the central bank. So it'll still be almost exactly the same. I think it's hard to imagine how they would very quickly be able to just take full control over your daily lives.
I could see a Chase stable.
Oh yeah, I think it's coming. I think Wells Fargo, Chase stable, because
Chase
they've got to
stable,
start reducing these transaction fees. I think they'll trade with each other because the liquidity will be there on these open markets. Yeah, absolutely.
Yeah. Time for one more question?
Thank you for being here. So when someone makes a purchase with a credit card, they have an assurance that they're going to get this good. If someone's credit card is stolen, they have someone to contact to have that money recouped. Similarly, fraud will always follow money. If people start making purchases with crypto and that crypto is stolen, someone's faking that transaction, what means or assurance do they have to get this money back?
So, do you want me to take that?
John?
Yeah, I'll talk
so
about it.
yeah, I can really quickly. So, the whole thing here being that you own, your data is not getting stolen out of some bank or somebody's hacking your credit card. You own the value that you've staked in these different places. I think the one thing that we're starting to see is the ability to roll back transactions and tokens. So like we have a token, for example, that allows us to go after stolen funds or go after funds in an escrow system. We have an escrow system. I think we'll start seeing a lot of things spin up that make these transactions, reversible, because it's all code at the end of the day. So while we don't have the full framework built out, I don't see it being too much longer to be us there. The main components have been fleshed out and they're starting to be worked. So we're very close. If not, some people I think like Silacoin is already very close. They're a stable coin.
I think also, if I can add, that the more KYC we get behind every transaction, it's going to be hard for somebody who stole that money to actually be able to spend it. So I think there'll be a way to get them at that point. So maybe the Binance network, for example, is trying to work in that direction.
Well, yeah, I think that there's been examples of, for example, stolen coins out of hacks have been blocked at exchanges and the people were forced to give it back.
Yep.
So,
Exactly.
like the $2 transaction, what I'm talking about is like more likely for the $2 transaction. But yeah, this is already built into the network is one of the great things about it, I personally think.
Yeah, KYC.
I want to add on that. Basically, it's a balance between functionality and speed, right? In current payment system, if you see, like it's very slow. But I think that's what it provides, that guarantee that your merchant and everything settle out over a period of time, right? In crypto, the transactions are fast, like we are immediately completing the transaction, right? So the process need to be redefined, like it has to be rethink in what you are explaining, right? That we have to find out a way in which that rollback process need to be done. So I think that will take another couple of years, but I think there are opportunities. Right now what we are thinking is like this is how it is done, so it will be done in a similar way. But in crypto, it require that innovation and rethinking.
Yep. Good. I think that's the end of our time. So thank you, everyone, for attending this
Thank you very
panel
much.
discussion.